Hi, this is Zach Meir with the US Chartbreakers here at Zach's Traders Cafe for Thursday, the 13th of July. Starting off with the S&P, which has probably, arguably, done better than we were hoping for, at least in the near term. Broke through recent resistance, 44.60 with a gap, which is always very pleasant. And while we're above the floor of the gap, 44.40 or so, we're looking for this market to break higher. 4,700 could be the target there, or the destination there, as soon as the end of next month. On the downside, we've got support there around the 43.80 level and then 43.30, but at the moment not really looking for any sustained price action back below 4,400. The old resistance line projection target, which was initially at 44.60 and is rising as we speak. On to the stocks and a few famous names, starting off with Beyond Meat, which seems to be rehabilitating itself. Here we've had a decent clearance this week of the 200-day moving average, around $14.60, and also above the old March-April resistance as well. View at this stage is that longer we stay above that March-April resistance around $16.60, the greater the chance of a move to $20, which is the top of the broadening triangle from back in March. If you are a fan of the shares and looking for greater glory, it could be up to as high as $28 by the end of next month if we follow through properly on the move we see at the moment. What's interesting here is it looks as though the 50 and 200-day moving averages are both rising or ready to rise. I think that even the 200-day line are imminently rising, and that could mean that we're into a golden cross, so the run up to a golden cross, which is typically the strongest part in the cycle. So lots to look forward to there while the shares remain above that 1660 March-April resistance. On to one of our most regular stocks here, Carvana. And here the shares doing us proud in terms of the build that we've seen. Spiked towards $45 yesterday. Current view is that above the previous target there, around $36, we're looking for a fresh leg to the upside, perhaps as high as $55 by the end of next month. So even now, a reasonable risk reward above 36, up to as high as 55, which will really take the shares back to where they were back in August last year. Moving along to a less familiar name, here we've got a stock which is also starting to bubble up quite nicely. Well, it's spiked up quite nicely. Unfull gap to the upside through resistance. The old resistance there around $1.80. Above that, we're looking for the shares to hit a February resistance line projection as high as $3.60 as soon as the end of next month. Draftkings is next, which has had reasonable coverage here in the recent past. Here you can see the shares are gapped up and sort of backed our faith in the situation. The initial target here was up to $29, above $29, and the top of that rising November trend channel, we could head up as high as $36 by the end of next month, which is a September resistance line projection. Moving on to another stock which has delivered the goods for the charting scenarios over the recent past. Fubo TV, nice clearance of the 200-day line. Now we're above the old March resistance area around $2.50. The longer we stay above $2.50, the greater the chance of move to $3.50 as soon as maybe the end of this month, the way things are going. And a less familiar name is next, and here we can see that we've got Healthcare Triangle, massive gap to the upside. What will be interesting here is that whether the shares can find where the shares can find support. Looks like they're open well below the $6.20 area, which is the old resistance zone. In fact, $6.40, the post-September resistance, really. There is potential support on the way down around $3.90, and that's probably the place to look at from back at the end of May. So above $3.90, we've got a chance of $6.50 or so, and then obviously after that, the chance of revisiting the spike highs of yesterday through the $10 level. One of the more regular stocks here is IONQ, and here you can see that looks like we're just ready to break out of this bull flag. We already hit our old target around $12.50. Above $12.50, looking for a March 2022 resistance line projection as high as $19.50, and that could happen as soon as the end of next month. But nice step progression there, so spiking higher, then another level, and then hopefully another level after that. We return to the next stock, which we've given coverage to recently, Luminar Technologies. Here, another stock which is clearing its 200-day line as if it wasn't even there. A recent resistance around $7.50, above $7.50. We're looking for a retest of March resistance through $10, maybe even stretched to as high as $11 by the end of next month. A real favorite here is Opendoor Technologies, largely because it's delivered the goods on the upside. A beautiful double hit of that target we had before, $4.60, above $4.60 on an end-of-day close basis, looking for as high as $6.20, and that September resistance line projection being a great situation ever since the beginning of May, with that unfilled gap to the upside through the 50-day line, which tends to be the starting on many of the best moves. Speaking of best moves, we've got Petros Pharmaceuticals, which has revived itself after that spike that we had back at the end of April. The key here is holding above the 50 and 200-day moving averages. The black line there, the 200-day line, around $3.20. You can see that we've got a sort of pre-open call there around $3.25. Probably the worst case here is that the shares have to test former neckline resistance in June around 280, but at least while we're above 280, then there's a chance of retesting the best levels of the early part of this year, around $8 to $9. Moving on to the last three, and the first one is a familiar name, a familiar face as well, for Rivian Automotive, and here shares double gaps higher in the recent past, which is wonderful, through the 200-day line especially. We've hit our target there around $26, nearly hit it, I suppose. Yeah, 26, so we did actually hit it. Above $26 on an end-of-day close basis, there could be a new leg to the upside as high as $38 by the end of next month. Ideally, we stay above the top of the latest gap around $22.80 or $22.90 ahead of a potential new leg to the upside, which would only take the shares to where they were back in the late summer last year. On to a stock which is looking decent as well at the moment, which has sort of fulfilled our expectation, Recursion Pharmaceuticals. We were looking for the shares to head up to the top of that broadening triangle there from December at $11.65. They've done that with quite a bang, above at the $11.60 area, looking for a fresh leg to the upside as high as $17 by the end of next month, or perhaps even sooner. That's it for me today. More updates tomorrow.